Hey guys, good day. This is Kalu Aja, and I want to review the Pool Financial Planning app with you today. Pool, that's spelled Pul. That's just a great financial planning app, well built, and I think you guys are going to love it. I've used it, I like it. It's very, very practical. I don't think there's any app out there in the market today that combines your personal financial planning together with, say, your estate planning and all that. So this is very, very unique. So let me share my screen so you guys can see the app with me. If you want to get it, just go online, pul.llc, pull. That's where you find it. And of course, you can then, of course, start to use and enjoy it. So the app is centered around a particular number, your financial independence number, your financial independence score, FIS. Everything you are doing here is designed to tell you if you are financially independent. And what does that mean? That means when your passive income can pay your expenses. To be specific, when your passive income can cover those needs, the non discretionary expenses, that's when you are financially independent. Everything on this app is designed to take you there. It's a very, very interactive app. You just ask you questions, it gives you modules, you plug those modules in, it gives you not just an answer, it tells you gaps, it tells you what to do, it tells you where you are deficient and then how you can fix it. It allows you put targets in, and as you meet those targets, you are getting closer to your financial independence score. Pretty easy. Let's go and see where we start from. If you look here, when you log in, it gives you this pathway, tells you all what you need to do, about maybe 7 pathways here. You start with your goals right here. On your pathway, you start with your goals, and number 2 is going to be your income, then your expenses, then your debits, your dashboard, and of course you can then pay off debt and use other modules to achieve that financial score. If we hit income and we start from there, right? Essentially, whenever you hit income, right? Let's just go to goals, because goals is where you're going to start from. The first thing you want to do is establish a goal. Here, I've put in some dummy goals and numbers just to populate the site and give you an idea of how it works. I have an emergency fund goal here. Look at my progress, nothing on my emergency fund. I have a home right here, and I also have a home too. I have an RSA goal. And basically, you can go in here, the top right button, hit add a goal. It gives you basically lots of goal numbers you can add here. You can do what currency you want to use on that goal, essentially, right? You can create your goal name. In this case, I can see my goal is home 3. You want to have 3 homes or 4 homes. That's my goal. I can come in here and say my goal is to get a mortgage. And when do I want to hit that goal? I can say I want to hit that goal October 15th, 2035, right? What's my target amount? I can say it's going to be 52 million or something like that, yeah? 52 million. How much have I saved so far? I can say 25, or just say 2.5 million, right? And this is my goal. If I say add goal, boom, it's just going to go in there and it's going to create a new goal, as you can see, right? Home 4, that's my new goal is created. I can see the gap I need to go to achieve that goal. So it tracks that goal and it's telling the system that, listen, this is a goal that I've plugged in, right? Fantastic. So if I go to the next step, it's going to be my income. I want to add an income. Whenever you go to a module, it's going to give you on the top right there, if your eye level, it's going to give you where you are currently. Right now, these are all dummy figures, but I'm on 3.5 million gross. Out of that gross, 2 million is my active income that I go to work. And if I don't go to work, I don't make that 2 million. 1.5 is my passive, which means I'm getting income from, say, investments, or a passive investment is something else. I don't have to go to work to get that, right? Or from that passive income, about 500,000 is my passive income. It tells me my percentages, where each source is coming from, and of course my total net income. So it's taking out some taxes and giving me my total net income, so I can tell where I stand on the income side. Remember, my target for income is to keep growing and increasing my passive income. That's what I want to do. I want to grow and increase that passive income number right there. Underneath, it's going to give me an investment. So it's telling me this is where basically I'm getting that income from. And I can go in here, click manage income goal, top right. If I click that guy, I can then increase or reduce that income goal. So essentially, if my income targets, I'm plugging in my income, but I'm creating them according to segments, process. If I go to expenses, exact same thing. At eye level, top line is going to give me my total expenses. It's also going to give me my total needs, my non-discretionaries, what I have to pay for, what I have said is the need. That could be housing, that could be groceries, right? My discretionaries, my holidays, my Arsenal jersey, all that kind of stuff. Things I don't have to buy, but I want them, right? And of course, also my recurring expenses that I make day in or month in is going to be up there. Same things, I come below here and I'm keying in expenses. If I click my top right, log expenses, I can log the expense in any currency, any date, the amount. I can categorize them. I can say if it's discretionary by hitting that button there. I can also say if it's a recurring by hitting that button there. I can even say if it's prepaid. If I pay my rent ahead of time, I can hit that prepay. Once I categorize and log in that expense, it captures it here. As you can see, all my expenses are here, broken down into needs, wants. If it's recurring, it's all in there. And it's starting to give me already a budget check. I'm using a 50, 30, 20 budget, right? In which case 50% are my needs, 30% are my wants, and 20% are my savings or investment. I can adjust this, right? But for now, this is how I've set it up. So it gives me my expenses here in my income sheet, right? And it's telling me where my money is going to vis-a-vis needs and wants. This is the income side of the whole program, right? And again, you always have, if you look here, when you have plugged in that income and the expenses, it's creating a budget planner for you. It's already telling you, hey, you told me you want to do 50% for needs, you want to do 30% for wants, I want to save 20%. This is where you are as regards that budget. For your needs, well, it looks like you are within budget. For your wants, you're within budget. But for your savings, you are not hitting that target. It gives it to you in a pie chart form, and it tells you where you are in your budget, color coded, so it's easy to follow. You don't have to be a finance person to follow this. You can see on the top below right, it's giving you month over month change of your income, needs, and wants. So again, you are seeing month over month. Is your money going towards your 50% income, or is it going towards your needs, or is it going towards your savings? And again, if you look at that, you really can't see it because I'm blocking that for you. You can change that setting and say you want to have savings at 50 and want at 40, whatever you want to do. But the idea is that you want to have a budget and it can track it for you and tell you where you are with that budget. All color coded, easy to follow, easy to understand because you've plugged in that income, you've plugged in that expense. Once we are done with income, we then go towards the balance sheet side where we start off with the assets. Same thing when you click assets, right? It's going to give you top level. Your total assets is going to give you your income generating assets. From that total assets, it's going to tell you how many stocks or how many assets are stocks that you are tracking using the ticker. So very, very important because I need to market for you. It could be bonds, it could be stocks, but anything that you are trying to mark to a commodity market or to a stock exchange, the app can do that for you. And then in your assets, what assets are you designating that you want to use as an emergency fund? In this case, I've designated only one, and the app will track it for me. You can see it's already warning me here. I have no insurance policies recorded. That's a warning for me. And I have very, very low liquid assets. It's tracking me and it's telling me, listen, this is what you need to do. It's telling me to go and buy insurance and I have to increase my liquid assets. Same thing is drilled down here. If I come in here top right and I click add assets, right? What's it doing? It's going to give me in any currency. I can put the asset name. I can choose if it's an alternative. If it's crypto, I can do crypto. If it's a bond, I can do bond. Fixed income treasury bills is right there. If it's a stock, I can do stocks or commodities. I can pick any asset class. It's a drop down and it can do that for me. I can pick if I'm buying through a microfinance bank or if I'm buying through a commodity exchange. I can pick all that, right? And I can pick the institution name. And literally here, you can tell it how you want it to track the prices. Are you going to manually include that price, or do you want it to track based on the ticker? So if you put the actual ticker, for instance, if you're going to buy MTN, the ticker is MTNN. If you plug MTNN in there, then it will track the price of MTNN and update that for you daily. You don't have to do anything to update. And you can select if it's an income generating asset. Like if you notice here, I have a Rolex watch on there. It's not income generating, so I won't have clicked this box for it. But if I buy MTN, it is income generating, so I click that box. Do I want to use this fund as emergency fund? I can't use my Rolex as an emergency fund, so I'm going to unclick it. But for a bank, even a stock, I'm unable to use my stock for an emergency fund, but I can use my bank. So I can click that button if I'm including a money market or a savings account, as so it may be. So I can click and unclick, and the system will then record that and track it for me, right? So if you go back to my table, you can see these are the assets that I have done mark to market: Dangote, MTN, VTI, that's a US ETF, and of course Bitcoin. And it's tracking it for me. It's telling me what I'm making every day. These are dummy figures, right? These are not real figures. But once you put the figures in, it will give you the real figures on your app. When I mean dummy, the cost is not this. Not how much I bought them. I just put them in here, but it's going to give you your profit and loss based off your cost and based on the market price. So it's all in here. If you go down to all assets, you can see where I have that Rolex watch I was telling you about and all that kind of stuff. So the watch is going to be an asset, but it's not an income generating asset and that. So it's just going to be there under all assets, and then mark to market, just the stock that is or the asset that is marking to market, giving you a market price every day. And that's essentially what it's doing. Same with liabilities. If I plug in liabilities, it's telling me my total liabilities. It's telling me from that total liabilities, how much is interest bearing. In this example, I owe 200K and all 200K are income bearing. So I have zero non-interest bearing liabilities, and my highest annual percentage rate, like my interest rate, is going to be 20%. It's listed all my expenses here. The lender, the balances, the interest, if it's interest bearing, the APR, that's the cost of the loan, it's all in here, and my monthly pay. Same thing, I will come to add liability. I can add the liability. It could be a mortgage, it could be an auto loan, it could be a student loan or a credit card, whatever it is, I can plug it in here. I can say if it's an interest bearing liability by checking the radio button, or I can say I don't know the APR, in which case, if I simply plug in if I hit I don't know the APR, I can plug in the monthly total. If I say I know the APR, I can plug in the APR and it will give me my monthly payment and automatically capture it into the system. So very, very easy to use. The idea is you don't have to be a finance person to use this app. It's going to ask you that simple question. Did you borrow money from the bank? Yes, I borrowed money from the bank. What's the interest rate they're charging you? I don't know. What do you pay every month? Plug it in here. If you plug it in here, it's going to try to calculate the interest rate for you, and it's going to capture it into your liabilities. Now, when you plug in your assets and your liabilities, you hit the overview. It's going to show you your balance sheet overview. This is your net worth. It's taking your assets from your liabilities and it's giving you warnings what you need to do. It breaks it down in further. Your total assets, your liabilities, how much of your assets are financed by debt. That's your debt to asset ratio, your coverage ratio, how much of your assets, right, can cover necessary liabilities. This is all green, so it's good. So it's showing you green is good, red isn't that good. So again, it's color coded just for you to easily see it and see where you need to work on. If you come down here, it breaks down your assets into income generating versus interest bearing liabilities. So you have 736,000 income generating assets, but you are paying interest liability in about 200. So you have a coverage of 3.68. So again, it's just telling you very, very simple stuff, not just to look at the assets, but to compare the assets that pay you versus the liabilities that are charging you. You could have a loan from your dad, and your dad might not charge you interest, right? It's going to be a liability, but at zero interest. So that's the point of tracking interest bearing and non-interest bearing. But why do we track interest bearing and non-interest bearing? Because when we are done with our assets, our liabilities, our income, and our expenses, when we have those figures in, we can start then doing serious work to say, okay, I want to pay down my debt. The first thing it's going to show is going to show you your cash flow. It's going to show you how much cash is coming in. It's going to tell you, listen, top line, you have 2.6 million coming in. 663 is going out. So you have a net cash flow of about 1.9, which is not bad. So your savings rate is about 74%. The target is 20%. So you are doing pretty well there. It's already showing you a financial independence score. What does this mean? This means you have enough passive income to pay your necessary expenses. In this case, you are over here, right? If you click the FI score, it's going to show you a much more deeper breakdown. It's telling me, hey, I'm financially independent. Again, like I said, look at your passive income coverage, 3 to 3%. These are made up figures, guys. When you plug in your figure, it's going to give you that number, and that's your target. If it tells you you are 40%, you know you have a 60% to do to catch up. How can you get your score up? Increase your income or reduce your expenses. And again, it's back to assets and liabilities, income and expenses. If you work on those four, you affect this FI score directly. That's the whole idea. It's trying to force you to think in terms of those four boxes. Increase my income, i.e., my passive income, reduce my expenses, especially interest bearing expenses. But when you have those four, you can do tools. Let's say you got a red here and you are not financially independent because you are owing a lot of debt. What do? You come all the way down here on the left-hand side, you go to Debt Planner. Here is going to list all those loans that you've taken. He'll list them out for you, right? You have total debt of 200. Remember, all that debt is charging you interest. Your monthly payments about 1,853, right? The average cost of your debt is 6.7, but your highest interest cost debt is going to be 20%, the annual percentage rate on that debt. It's going to give you two ways to pay your debt. Either you do the debt avalanche, in which case you're paying the debt with the highest interest rate first, or you are doing the snowball, in which case with snowball, you are paying the lowest balance first, right? I always recommend to do the avalanche because you are paying the highest cost down. If you look down here, if you pick avalanche, it's going to tell you this is all the debt that you own. You can say, okay, what if I paid 5,000 naira extra and I wanted to use avalanche? If you hit the payoff simulator, it's going to calculate and tell you which one you should pay first. It's going to say, hey, pay your promissory notes, your credit cards, and your co-op loan. Why? Because with the avalanche, you are paying with the snowball, you are paying the smallest balances first, right? But if I do avalanche, right, and I hit the simulator with the same 5,000 and I hit the simulator and I come all the way down, it's going to tell me exactly what to do. It's going to tell me to pay my credit card first, then my promissory note, then my co-op, right? So I can see here it's telling me if I do it this way, I save 25,000. It's going to tell you what you are saving per strategy that you want to do. List all of them here. So again, it's giving you your financial score, but it's telling you how to get that score up. So if you are in the red in your financial independence score, it's going to tell you how to pay down debt to then take advantage of a lower interest rate by paying off the principals faster. Again, it tells you about your emergency fund. We talk about emergency fund. You've got to do this first before you invest. Why? You want to build this up so you can act to cover your emergencies. You don't have to sell an asset to pay an expense, right? You don't want to do that. Here, look at my emergency score. I'm horrible here, just 500,000. I'm critical. I don't even have 1 month saved. So it's telling me my 3 months target. What target? 3 months of what? Of my expenses. It's telling me it's about 1.6. But what I have in my gap's about 1.5. I haven't saved anything here. It's telling me my essential expenses out of that 1.6 is about 551,000. So I'm really low on the score, and I only have one score set up for emergency funds. So it's telling me your funds are critically low. Focus all surpluses on building this. So if I do my assets and liabilities, remember, if we go back to our cash flow, what do we see here? We had a positive cash flow, right, of 1.97. So it's already told us that. Now it's telling us that, listen, from this positive cash flow, focus on your emergency fund and fund this out and pay our debt. So that's what we're going to do, is telling us, hey, you've got money. This is how you should use that money to get your financial score up by paying this down. So I only have one thing linked here, which is a Stanbic that I'm using for emergency fund. I can link more, and pay off or increase my emergency fund sources, which would then make me a bit on the green on emergency fund. If you don't know how to do it, I'm going to list it out for you here, 1 to 4, how to set up an emergency fund, right? So again, you are seeing your score is giving you the score and telling you how to improve your score. Again, look at your retirement. Retirement is going to be one of the key things that you're going to have to work on. It's going to be your most important, should we say, investment, because when you get older, you cannot work. So you want to ensure that you've got enough when you are saving to cover yourself when you're no longer able to work. That's the whole idea of passive income. If you can build your passive income whilst you are working, then when you retire, you do not have to work anymore, but you're getting that income in to cover your expenses, which is exactly what your retirement is trying to do. I love this guide because you can essentially choose the way you want to track this. In the US, you can do US, but in this case, we're just doing Nigeria, which is PENCOM, right? If you do your PENCOM, you can plug in your current age, your expectancy for life. How long do you want the system to calculate you're going to be alive for? That's just a number it's going to use as your duration for investment. Do you have gratuities? Do you have an RSA expected return? How much do you think your RSA will pay you back every year? In this case, we picked 8. What's your RSA balance currently at the moment? What's your monthly gross currently? Are you, in terms of your risk profile, are you conservative? Are you moderate? Or are you aggressive? If we say you are aggressive, that means you want to do more of asset of equities, right? And additional voluntary contributions. Are you going to do any additional voluntary contributions? You plug it in here. Your monthly RSA contributions. How much are you going to contribute almost every month? You plug it in here. If you hit that, it's going to ask you, do you want a program withdrawal or lump sum? Let's say I want a lump sum. It's going to calculate all that for me. It's going to say, how much do I desire? If I say I want, let's just say I want 500,000 as my lump sum when I retire, right? So if I hit calculate retirement plan, it's going to tell me, hey, based on what you told us, this is the lump sum that I'm on track, based on numbers I've plugged in here, I'm on track to get that lump sum. I have 12 years to retirement. This is what my RSA balance will be, 174 by the time I retire. I'm going to get 1.3 million lump sum. And of course, I'm going to get a target lump sum of 500,000 and all that, right? This, my RSA is going to be the 174. The program withdrawal will be 1.3 million a month. And my lump sum will be 500,000 based on the numbers I've told it. Again, this is all, should we say, play numbers. You've got to put in your real numbers and it's going to give it to you. If you have a red, if it's telling you you can't meet it, that's the same as your financial independence score. It's still tied back to passive income, because without the passive income, you can't achieve the score. Once you are working, it's expected that you are then taking monies out and investing with your RSA. Your RSA is going to work for you even when you stop working. So this is part of your passive income. This is exactly what you're doing. You are taking money from your active and you're investing in your passive to generate you a stream of income by the time you finish working. Same thing again, we have your insurance. You want to protect yourself again even before you start to invest, especially when you have dependents. So it's asking you, this is insurance template is basically going to walk you through to give you an insurance product. In this case, see here, I chose Sharia, and I wanted to look at my options in terms of Sharia like. So it's telling me investment link Takaful. I can come here and change it to just no, just give me conventional insurance. And if I do conventional insurance, right, it's going to change that out for me and say, okay, I'm going to give you maybe a term life and all that. You can see it's into permanent life. So it's asking these questions. I want to protect my family. I want to pay off my mortgage. It's asking you for goals. And when you tell those goals, it's going to essentially tell you what kind of insurance that it can then offer to you, right? It's not going to recommend. It's basically taking your answers and saying, this is what I recommend. So be honest with the system and tell it exactly what you want, and it's going to give you a good answer. So this is one thing about the app, that is tying in all these life events, insurance, pension, right, retirement, back into your financial plan, because you want to have a holistic 360 view of a financial plan, not just how much you're making from stocks, but what are the obligations you have when you retire, and also see your dependents. That's why I say this is a great app. Of course, we haven't forgotten investments. With investments, right, it's going to ask you again those questions. He's saying, hey, this guy prefers, again, halal investment. If you go in and you answer the questions, it's going to ask you questions. These are the questions here. Yeah, you can do this whole stuff all over again. It's going to ask you how old you are, what goals you have, what's your primary objective, and you're going to give it answers. You can see all the answers here. Based on your answers, it's going to recommend an asset allocation schedule for you, which is going to be this guy right here. Fixed income, 40%, your target, and your range. But look at the cool thing about this app. It's giving you a glide path, which means it's saying, as of today, what today is when, maybe July, as of today, this is what we recommended for you. But as you get older, we're going to glide you from where you are now to basically where you're going to be as you get older. So now I've got 10 years to my goal. Remember, my goal was to retire in about 85, right? So I've got 10 years to my goal. As I get older, if I get to 5, the whole asset allocation will change, essentially to change. If I get to 2 years, the whole thing will change. But right now I'm on 10 years. So not just giving you a number today, it's telling you the next 5 years, in the next 10 years, this whole allocation is going to change. So if you are then working with a stockbroker, you can print this page out and say, listen, this is where I am, but I'd like to basically move my portfolio to rebalance it from here to there because I'm getting older. I want to reduce the risk I'm taking and have more fixed income. That's what this is showing you. Your risk profile becomes more conservative as you get older. And you can see as you get older, you're going to go towards more fixed income. If you are younger, you do more of equities. Essentially, that's what this is going to show you, right? So you can add holdings if you want to add holdings that you didn't add on the income side. It's going to bring you right back here, and you can add assets into your investment plan. Otherwise, if you just come to your left-hand side and click investment, it's going to give you that profile that you have. It's going to give you an answer based on the questions that you have answered, right? Again, the last one is going to be your calculators. Really, anything you want to calculate, we have it here for you that has to do with your financial plan. You have a savings goal right here. You can calculate your savings goal calculator. Tell it, this is what I want to save. This is my interest rate. How much should I invest now? How much do I need now? It will tell you. Component calculator, it's got a component calculator for you. Give it your initial deposit. Tell it how long you want to invest. How long will I have at the end of that period? You have your investment ROI. You can calculate investment ROI. Simple loans calculators are also there. You can do a car loan calculator. You can even do a mortgage calculator. It's going to ask you more questions, but it'll give you that answer to you. I like the payee calculator. You can plug in your monthly gross in here. I put 1 million here. Let me put maybe 2 million here. If I put 2 million here, so you see, it's already doing everything automatic for me. It's saying my basic housing and transport. This is the rates I want to use. I can change it, guys. If I change this, everything else will change. It's asking me, am I paying pension? There's a radio button here. I can say yes, and I can say no if I'm paying pension. If am I paying NHF? Am I paying NHIS? I can click and unclick, and it will update that for me. Am I doing mortgage interest? Am I doing life insurance? Am I paying rent? These are what we call in the Nigerian tax law. These are your the deductibles. The more you do this, the more you reduce your taxable income. So if I said my income was 2 million, at the end, what is going to be taxable is just going to be about 1 point. What I'm going to take home about 1.4 because I've reduced my gross income by buying pension, by buying national housing fund, by buying national health insurance scheme. I've reduced that back to about 1.4. And from that 1.4, that's when it then applies my taxes onto that 1.4, where you have my first 800, you can see it here, my first 800,000 going to be free, no taxes there. Then my next is going to be at 15%. And it's telling me this is where I am. I'm on the 21% bracket based on basically what I'm earning, which is going to be an annual figure, right? So again, it's tracking that for you with a calculator. Then you have your reports. You can set your reports up to come to you every month, every week, and all that. It's a great, simple report. Top line here is giving my financial independence score. It's right there. So this is what I'm working for. It's telling me as at this date, this is your score. Good job. You're doing a very, very good job there. Net worth is there. Net worth change from the last period is going to be captured there. Average monthly savings and how many times I've maybe take a snapshot. It's going to show that to me. But this is the cool part about the whole report. It's telling you what to do. This is a composite of everything you have plugged in. It's telling you from your income to your expenses to your assets. It's giving you, if you are green, which means you are good. Yellow is saying to watch it. Hey, you've got passive income covers to 6%, but you only have emergency fund of about 0 to 9. You are very, very thin there. So you're saying go and fix your emergency fund. Look at your assets going or falling. You have a red. Your assets fell 11 million during the period under review. You want to find out why your assets fell by 11 million, right? Look at liabilities. It's green because my liabilities are falling, which is a good thing, right? My net worth is 785 is positive, but it's yellow. Why? Because my assets fell. So it's asking me to watch that. No retirement balances tagged yet. Again, dummy figures. We haven't put it in here, but it's telling me all what I need to go fix. No insurance policies are logged, right? An investment style, it likes what I've done with my investment style. It doesn't like my legacy planning. I haven't done it. I haven't assigned a letter of next of kin. I haven't written a will. So it's giving me what to do. It's not even giving me my opportunities and next steps. It wants me to stabilize by building 3 months of essential emergency fund. It wants me to protect my income by buying insurance. It also wants me to do my legacy, to essentially talk about writing a simple will, right? So this is essentially, like I said, it's a whole financial plan app. It's not telling you, you're not going to buy an app here. You're not going to buy a stock here. You go buy your stock somewhere else, or you do investment somewhere else, and you track it here. It's giving you a composite 360 view of what your assets, your liabilities are, so you can then take action. You can print this stuff, show to your investment or financial consultant. It's easier for him to understand what you're saying and then to make those changes together with you. It's showing you a network trend. As a family, you can do this together. We have a family option where you can do yours, your partner can do yours, and then later on you can merge it. So that's the whole idea. This is not we're going to buy or sell. This is we're going to track and measure and then amend as we see fit. And if we do that properly, this is not something you do once and you forget about. This is an app you go back to, if possible, weekly, daily, quarterly, or annually. You want to see this number keep growing, becoming green. And the more green it is, the more, should we say, stable, and you are able to retire. That's really it, guys. So thanks for hanging out with me and just going through this great app. Like I said, if you want to know more about this app, go online, pul.llc, get the app. It's free to use, log in and start to use it. You cannot improve what you have not recorded and tracked. It's just not possible. If you don't plan, you can't improve. But if you don't record, you can't even have anything to review and improve. So that's the point of this app. I like it. I know you guys would like it. Let me know in the comments, or there's a WhatsApp app. When you go, here's a WhatsApp app here for the group that you can also make comments. Let's see what you like, what you don't like, what you want to see added. We will get that done for you. On that note, guys, thank you so much for hanging out here. And I hope you guys do use this app and enjoy it as much as I've done. Again, my name is Kalu Aja, and I'll see you guys next time. Take care and bye.